Hey guys, if you like this content, I would greatly appreciate it if you guys liked the video and subscribed to my channel. It helps make these videos worth it going forward.
What's up, guys? Altcoin Sherpa here with the crypto market review. As always, this is not financial advice. I'm not an expert to your own research. Okay, so today was really insane price action overall. If you look at the 5-minute chart, it's absolutely insane in terms of the volatility. We had some news that CPI was higher than expected. Obviously, the market dumped. Quick reversal, quick rebuy, and now it looks like it's up only in the short term. Um, Look at that. Like overall, Wick was just absolutely insane on the 4 hour. And uh, what am I looking at here? I mean, I think that it's it's pretty likely that price continues higher in the short term. Um, that looks like a liquidity grab, and it's possible that the markets already have priced in the overall rate rate hikes in the short term. I think that it's still likely that price kind of it's best to be cautious around this area. With that said, we are close to the 200 EMA, traditionally a area of support and resistance, and as of right now, it's getting very close to that level. Additionally, the high volume node area right near the point of control, right around 48K, 47K. This is the area that I've been looking at for the last several days overall. I thought that, this is the area that it would tap somewhere around here. It would make sense that it trades above it as well to get people very bullish right around 50K. People are going to be calling for 100K at that point. And at that point, it would make sense to me that the market nukes lower. I don't know where exactly it's going to come down. I had a lot of ideas that price still has to felt some inefficiencies and go to 33, 34, 35K again. Um, this reversal is definitely looking fairly strong in the short term, though. And I'll have to change my bias if we start printing some higher lows. And what I mean by that is, say we hit. So let me first say that it's almost inevitable that we hit a lower high compared to some of these other highs. Like these areas here, these highs are almost certainly going to uh, these won't get broken is what I'm trying to say. Like I don't think we just V-shape from 35 to 70K. We're going to hit a lower high. I don't know where it's going to be. I don't know when it's going to be, but we will hit a lower high somewhere. I don't know where it's going to be. As I said, 47, 50, mid 50s possibly. Um, but to me, it's really interesting where we print the low at. So what I'm expecting here is some sort of like lower high. Um, compared to some of this other previous price action, and then some sort of rejection. I don't know to what. Um, and then if we print a higher low in this situation, as in a higher low compared to the low set back in January, so you just say higher low at this point, then at this point I would consider flipping bullish after we hit a higher high. So if it's this structure type of if it's this type of structure here, then I think that things look very good. Um, Maybe it's possible that we continue this kind of choppy, grindy price action up until we see what the rate hikes do in March. But this is kind of like one scenario that I'm viewing. As of right now, though, I'm still not sure that we are out of the woods yet. I'm still actually thinking that we go back and test 33, 34, 35K again. And the reason is that if you look back at the previous consolidation back in May and June and July, you'll see that price kind of sat in this range of 40K to 30K for several weeks, and it made runs at both the highs and lows several times. As of right now, we haven't really seen a ranging price action quite yet. Um, and to be clear, this was a lot more volatility at the start of it. Um, and I think that you'll traditionally see more volatility after a huge move right away, and then the volatility dies down. Whereas this situation, we haven't really seen a whole lot of volatility right after this big candle nuke in late January from 44 to 32 or so, we haven't really seen a ton of volatility similar to like what we saw in May and June and July. I think because this current downtrend it looks quite a bit different than what we saw back in May. For instance, in May we just saw like a big market nuke where it just went straight down and then chopped for a while. Whereas here we just hit like a lower high, lower low, and it's just like a slow, grindy price action type of move. So, you know, after analyzing these charts a little bit more, maybe we don't need to see a lot of volatility right after this move because of just the way that the price has moved relative to how it was in May. Um, and it would make sense too a little bit to a degree. Like I don't think you need as much high buy volume on this type of move from November, December, relative to what we saw back in May. And the reason is that a lot of the sellers were filling orders on the way down, like because when price makes these bearish retests, these are some sell orders that are getting taken out of the market every time. And if you compare that to something like May, a lot of these sellers never had the chance to get out because price nuked so quickly. Well, they got a chance. I mean, um, like underwater longs, that is. I mean, either they got liquidated or some people are bag holding. So generally speaking, like people like right here, um, like there's going to be more bag holders in these types of situations after a market nuke than there will be after a slow grind down. Anyways, what I'm trying to say is, I still am. I still would not be surprised to see like one last nuke down lower to 33, 34, 35K. It would make a lot of sense to me, and wait to see price get up to like I don't know, 50K or something, and then we have like one last shakeout, um, hit the lows for a little bit, chop around, and then we form some sort of base, and then we make another run up. This is one scenario that I'm personally viewing. So how I'm kind of playing this move right now is I've just got bids lower. I'm not really actively longing at this current area. I don't see the risk to reward being very good. I do think that it's possible that we go even higher to like 50K or low 50s. Um, but as I said, the really important thing to me is where we set the low. So like, if we hit like a low here, but then we hit like a lower high and then we start like hitting lower lows at that point. This is to me just like a continuation of the bearish market structure that we currently have. Say we hit like a lower high and then like a lower high, and then a lower low. At that point, we're just like going to continue down, in my opinion. Um, but another scenario, as I said, is to like hit a high here, hit a higher low, and then if we hit a higher high at that point, we go up to like 57 or something like that, then I think I'm really going to consider changing my bias because um, this is how I played the September move, or August and of September. I noticed that these highs got taken out right here. And what happened after that? We set a higher low compared to the consolidation. And then once we broke this high compared to September 5th, that was a confirmed higher high at that point, and then we were just going higher. Now, obviously, that we all know what happened next. We had like a blow off, not even really a blow off top, just kind of like a top, and then it kind of grinded down since then. And and then we hit like a lower low. So it was just like a very weird type of price action because this turns into a bullish market structure, and then um, we basically just died off from that point. We never really hit any significant low. Now, I will say one thing that was different about this type of slow grinding price action is that we didn't really wick into this demand area like at 40K right after this big liquidation wick. Whereas back in May, you see this wick, you see this demand area getting tapped over and over and over again, right? This like gets tapped over. It's because there's a lot of volatility right after the move. Whereas this move, it hit this big wick and then it stayed up really high And in hindsight, like the fact that we didn't go any lower to like 43 or 42, that was a bit concerning because we should have been wicking into that demand area, and price should be getting bought up at that point. But instead, we just hit a bunch of like a low, slow grind, and then hit a lower high, and then just like nuke to lower. So that's one of the reasons why I really wanted to see a lot more wicks into this demand area, because to me, that's kind of how bottoms are formed. You see a lot of wicks into the demand area, and as you can see, the last several lows that we've seen, you see a lot of wicks into this area, and you see like price holding. So this is what you really want to see, in my opinion, when a bottom is formed, and we haven't really quite seen that. Now, as I said before, this type of slow grind price action is different than what we saw back in May, June, and July. So every little reversal is going to look different, and I recognize that and acknowledge that. Um, and if this is just a V-shaped reversal, then I'm going to be wrong. Like I'll be happy because I'm exposed still to the market. I'm not one of those people that are just totally flat. But at the bottom line is that I do think there will be a lower high somewhere. I don't know where it's going to be, and I am going to view the low. That's kind of my next step is to where price is going to look. Um, I don't know if we stall here. I am looking at anywhere from 47 to 50K or so. Kind of, as I said, the high volume node, 200-day EMA. Those are some kind of two indicators that I'm really looking at. Anyways, I hope you guys enjoyed this video. Be safe out there in terms of the overall leverage. The volatility is absolutely insane.